Good morning and welcome to the daily market update with FP Markets. So another sort of corrective day on Wall Street, and Asia's sort of thinking about taking the lead from those guys again. So no real surprises here. It's the same story that we've had and concerns, I mean, probably over the last few weeks and months. The inflationary concerns from what has been a stellar performance across stock markets. This is the ASX chart. You can see we are at historic highs. We have come back from those recent ones. I'll bring up the S&P here to show you the US numbers, but we are still and you know, a cracking bull run. And I think even a report out by Refinitiv today, Thomson Reuters, to us old school guys, looking at US companies to have had sort of like 50% growth over the last year. It's huge numbers, and that's why we've got these historical highs across indices. And obviously there is concern out there in the investor market that we've had an incredibly unique last year, globally and certainly, you know, globally in general, but for financial markets as well. And that's the concern that's hitting investors, and that's why we're seeing this volatility at the highs. Has the growth been warranted, I think, is the question that everyone's asking. We're looking at people coming out of the pandemic. How much of that growth has been priced in when mobility comes back and vaccine rollouts come through? So these are the key drivers of the market. These are the key fundamentals of the markets. One of the fundamentals, and I'll go over to our currency pages in a second. One of the main fundamentals, of course, we're looking for in terms of currencies is interest rate differentials. And with most central banks across the globe close to zero due to adding stimulus for the pandemic, it is understandable that there's this concern that inflation comes in. This forces central banks to raise interest rates, and then we'll start to see stock markets come off as less money and less funds are released to the market. On top of that, of course, you've got added stimulus that we've seen. We've seen QE. We've seen a lot of movements in the bond markets over the last year with governments throwing cash at markets to keep things going. And you know, arguably they've been incredibly successful. But is there a crash to come, and how hard is it going to be? And that's the concern we've really got in investors' minds at the moment. Clearly, we're not seeing any dramatic moves, but we are getting volatility at these recent highs. So apologies for my rant on about the overall fundamentals behind things, but it is incredibly crucial for us. So I'll just do a bit of a currencies run through. So today's update is a little bit more in depth. We're trying to give a little bit more help, a little bit more insight, I suppose, onto some of how the technicals are matching up with the fundamentals. So Aussie still very much range bound, and you know, we are looking for that fresh direction across all of the majors from the US market, and that's why we always look back to the Fed. It is still the biggest economy in the world, quickly being caught up by China, of course. Range bound for the Aussie, so Aussie's still relatively well bid, and you can see this on the longer term chart here. It's come off of those last March sort of pandemic lows, so over a year ago now, and we're sitting back around what a lot of people consider us to be fair value, sort of oscillating around that 80-cent mark for the Aussie. On the tighter hourly charts here, we are range bound because we are looking for that fresh direction. So for the Australian dollar, you're looking for commodities to start moving one way or the other. Up, you'll see the Aussie raise with it. Down, you'll see it take a little bit of a bath. And also, we're obviously looking for that other side of the equation is where is the big dollar going? Where's that greenback going? We're looking at the Fed. Are the Fed talking about pulling stimulus? Are the Fed talking about interest rate hikes? And that's that sort of concern I was talking about before. If you're starting to see interest rates hikes, that's going to put pressure on the Aussie. It's going to lift the dollar, so we've probably got some downside potential. So at the moment for the Aussie, resistance coming in just beneath that 79 cents. Prior high this month was just up there, as you can see here, around 78.90. Support now on that sort of, it's a weaker short-term trend line, but around about 77, the figure 77.05 there. So sort of mid-range at the moment, but traders will be looking to maybe pick some up on the downside, lob them out up there until we get that fresh direction when those break trades are really going to kick in. Kiwi, very, very similar to its cross Tasman cousin, sitting middle of the range, not too much going on. If you played this range, what, 71.50 or 71 the figure, 73 the figure for the last month or so, you'd be doing very, very well. And I would suggest some of the options players have had it away if they've been oscillating around that 72-cent mark. But once again, on the longer term charts, we're looking Kiwi is still in a good bull channel. That's not a bad sort of trend line to be throwing off. I'll bring out that chart here. As you see, we've got a few touches there. We've touched a few times down here. So any bulls will be looking to pick some up around here. There's the top side resistance level we're looking at, sort of 74.50-ish. But just keep an eye on that one as we go. It does feel, certainly in currency markets, that we are due a bit more volatility, and that's really going to kick things in. Now, interesting chart here. Cable we have got at a trading level at the moment. As you can see, longer term, it's at that resistance. Same level that's coming in on the short-term charts as well. A real good climb off that sort of trend line support. If you've been picking up at 138, you've had a cracking trade. Moved up. We've topped out a few times near this trend line, and as you can see here, the bears will be looking to shell some out with a short stop loss above this line. It's sort of a relatively easy trade, but we have had a few times up. So those guys looking for a bullish move in sterling, especially against the dollar, you will start to see some stop loss entries building up around here, which could see you move higher. The move higher, obviously, the next target on the top side is this previous high, 142.50, so about a big figure higher. After that, you've sort of got a little bit of clean air, and as you can see here, we haven't seen other highs since, like, this is the last high we've seen there back Q2 2018, and that is, system's not working for me, is it? But as we can see, it's coming in around 144. That's been the high since a lot of lows, and then all the way back to 2016, where you're looking at it comes in around 149, just shy of that 150 figure. So potential, I think today, certainly where we're sitting at here in the start of the Asian market, potential for some decent moves in cable. Keep an eye on that and how that translates through to the crosses as well. So you've got euro sterling sitting down there. That's not too far off. It may take us down. There could be a little bit of a stumbling block if euro sterling gets down to around about that 85 the figure level. Euro, similar situation to cable as well. I think you will start to see a lot of action around this longer term. That trend line's hitting in around here, as you can see, 120, 155. We're sitting just beneath it. We've topped out a few times. Previous highs there at 121.80. So I think some of those bulls out there will be looking for a clean break of that 121.80 for a move topside. Obviously, the bears selling around here looking for a move back down and see if we can break some of those training levels. So there is some opportunities coming up in the currency markets. I think that's sort of what we're trying to identify. Dolly Yen has once again been relatively range bound. Said this a few times in our updates. Dolly Yen, you've sort of got that confliction between the big dollar movement, the greenback, and the yen's traditional risk on, risk off mode. Now, that risk on, risk off has been reduced somewhat over the last year because Japan's been sitting at zero rates for what seems like forever, and it is a long time, and that's why traditionally Dolly Yen was a really good indicator, and the yen crosses indeed of when you had risk on. You saw Dolly yen crosses going to the top side as the theory being that Japanese investors sold yen to get into those high yield currencies and of course economy. Excuse me about that. I've got some messages coming through on the side. But that effect has been lessened over the last year as interest rates have drawn down to zero across the globe. So you don't get that carry trade anymore. And that's why we've seen more range-bound trading conditions in the yen. Once again, we're in there. And similar sort of to Kiwi, you know, the month of May, if you were looking at 108.40, we picked that up a few times, sort of just beneath 1010. You'd got a few decent range trading options in there, and options traders would have been doing well. CAD has had some decent moves, and it seems to sterling. I think oil's been going great as the world looks to sort of come out of the pandemic recovery. We've seen a few supply shortages as well, some movement. Obviously, we saw over the last couple of months, we saw that interesting, it wasn't a road block, it was a canal block. Over there in the Middle East. All these things affected oil, and we've seen a great appreciation in oil. That's been added to by the BOC over the medium term as well, where they've actually been one of the first central banks that's talked about action coming out of the pandemic, and that's why we've seen CAD appreciate so nicely. So dollar CAD down to sort of 120.50 at the moment. We're challenging that recent low down at 120, where's the low, 120.40 or 42 there. Could be some movement in here as well. So with sort of those bulls looking to maybe pick up some on the lows, and obviously bears looking for any retrace to sell or even a break of that low there. So definitely some trading opportunities coming up there. For me today, I think cable, euro, CAD looking good. Swissy as well. Swissy's sort of coming in here. Either side, you've got a couple of trend lines. Top side, bulls maybe looking for a break here. Downside, you'd maybe look for a break of that 0.90 euro level, and then the previous lows are only sort of 15 points below that. So that's sort of a good consolidated trade there. Looking across just to sort of my it's a bit of a mix mash, this sheet, isn't it? It's got majors at the top, but it's clearly wrong. Bitcoin still on the back foot, and if we look back to it, you know, the fundamentals behind Bitcoin are of course incredibly confused. Elon Musk coming out again, and it still feels like the hangover from what he came through the other day when he's saying, you know, it got a great jump to the top side when he bought Bitcoin and then said his company Tesla was prepared to take payments in it, and now he's rescinded on that due to environmental concerns, and Bitcoin down, like significantly down really from highs well above around about 65,000. We're sub 45,000 now. We've broken beneath that low that we saw the other day, so keep an eye on that. Obviously a hugely volatile investment, so make sure you manage your risk and capital management on that very tightly. And the other interesting move as well we got overnight, gold just broke above. This is a longer term trend line as well. This is on the dailies, as you can see. Gold's had a really good move back up from those sort of sub 1700 levels, break through that trend line there, and we're just peaking above it now. You will start to see some bulls coming in. It hasn't gone significantly higher, but these are the dailies as well, as I do remind you. So they're interesting to see where we go. It does line up with that risk off trade that we're seeing across the stock markets, where we've seen sort of some negative numbers out of Wall Street today. As you can see though, Asian markets are coming in slightly better as well. So this is where I think there's some opportunities for currency traders, because there are regional differences. We do know that Asia has, in general, or sort of Far East Asia, I suppose, China, and you know, for us here in Australia and New Zealand, there has been a quicker pull out of the pandemic, and that's where I think there could be some regional differences coming in, especially for those currency traders. But as you see here, not a bad start to the day for the ASX, and even though we did have a bad run from Wall Street, so we'll be keeping a close eye on that. I know you can see the headline there that ASX actually opened up 0.3%. You would not necessarily be expecting that, having seen a bit of a down day on Wall Street. So keeping an eye on those. We are getting some differences, and as I said, there's definitely some opportunities coming up across the currencies, across the indexes, and of course across the individual stocks. That about wraps it up for me today. So if you've got any questions, please do contact the team at FP Markets. But have a cracking day, and as I said, plenty of opportunities out there in the market. Volatility seems like it is coming back, and will come back strongly. Thank you very much.